Hello, everybody. I'm Tony Garitano, founder of Progress in Lending Association, and welcome to day 2 of the 15th annual Engage event. I want to start off by thanking our sponsor. BlackFin Group is the mortgage industry's most trusted consulting and advisory firm. Since 2019, BlackFin has been providing peace of mind to the executive teams at banks, credit unions, investment firms, mortgage bankers, mortgage servicers, housing and finance administrations, and government agencies. Lending executives say the reason they turn to BlackFin is because of their specialized expertise, knowledge, and decades of hands-on experience in mortgage banking. Nobody knows mortgage better than BlackFin. Thank you so much, BlackFin, for sponsoring the 15th annual Engage event. Today, I want to talk about technology, more specifically, must-have technology. This technology is the technology that you must have and you must implement in order to be successful in 2026. In order to discuss this topic thoroughly, we've assembled a team of experts that includes a top origination vendor, a top servicing vendor, and a top lender to give you an entire picture of the technology that you need to be implementing. I want to start off on the origination side, and for that, I'll introduce you to Joey McDuffie. He's VP Sales and Marketing at Blue Sage Solutions. Joey has been dedicated to designing, developing, implementing, supporting, and selling mortgage origination technologies for over 25 years. He has worked with a variety of the largest banks and mortgage companies in the US and abroad in designing and implementing mortgage origination technology solutions and assisted with transformational process reengineering. So Joey, from an origination standpoint, what would you say is the must-have technology that everyone needs to be investing in today?
Of course, AI is the the number one thing everybody's talking about. So I thought I would kind of start with that. AI is permeating our entire universe, as we know. And as a matter of fact, I just got back from a seminar here in Nashville where a gentleman actually generated an entire song in about 3 minutes, both the lyrics and the music. So we can do the same kinds of things in mortgage technology. I think, starting in the front of the process, AI driven loan officer tools is really important to increase loan officer productivity, especially with the upcoming rate decreases where purchases would go up, refis potentially could go up as well. So I think it's going to really move away from kind of a chatbot experience to really more of an agentic co-pilot for originators to engage with borrowers, to engage with their back office staff, and basically leverage all sources of third-party data, from appraisal data to underwriting data to you name it, right? So I think the agentic AI sales agent capability is going to be front and center in 2026. Loan officers need to be able to easily create leads on the go. They need to be able to go in and generate scenarios easily, when they're out at an open house. And then, of course, they need that borrower engagement all the way throughout the entire loan life cycle. So I think that's one of the big things there. Additionally, the other thing that we're seeing a lot of trends in is the document processing and automation. I know people have been working on this for years, but finally, with using AI-driven approaches, that whole intake and classification to move all that to the front is here. So AI can read borrower submitted docs, W-2s, pay statements, bank statements, pay stubs, auto tag them, do extractions, use natural language processing. So instead of a lot of manual review, either by the LO or eventually by the underwriter, all that can do that can be done up front, and that'll streamline the origination and the underwriting process. So underwriters can really focus on exceptions. The other thing from a document perspective that we're seeing, we'll see more of in 2026 is fraud. Of course, with all these things going, AI that's at front and center. There's a lot of fraud that's out there in the universe. So detecting tampering, detecting inconsistencies, falsified documents is really big from a document recognition perspective. To enable all this, I think the other big trend that we're continuing to see is really like an end-to-end digital platform. We're seeing still to this day in 2025, folks that have disparate POSs, LOSs, you name it. So really, in order to take advantage of these systems, really you need a comprehensive end-to-end system that's all using the same data. I think really data is what drives AI. So having a centralized repository of that data that unifies the borrower, the loan officer, the underwriter, the closers, the settlement agents, you name it, that's very important in order to realize some of these new technologies out in the marketplace. So having that end-to-end system reduces costs, improves data accuracy, and speeds up the entire loan lifecycle. So I think that's really going to be a key driver. And like I said, especially with the upcoming rate decreases, as we all expect, instead of actually having the old linear process with, okay, rates are down, we're going to hire more people, we need to actually go into more of a nonlinear approach to double and triple productivity of their current employees without having to go through that cyclical approach that we've all seen for 20 plus years. And then I think lastly, the biggest thing, there's so many points we could talk about, but lastly, going back to data, I think data and analytics is really big. So being able to cross-sell, look at retention on the servicing side, being able to provide additional products, non-QM. I think I was reading the other day that I think non-QM actually went from 8%. It's projected to be 15% in 2026. So being able to have a comprehensive system where all that data is there and you can actually offer your borrowers additional products, HELOCs, closed in seconds, non-QM, alternative products is really big, being able to get to that information easily. And then, of course, with all that data in one spot, right, predictive borrower retention and being able to proactively reach out to those borrowers is very important to basically increase that recapture business. So those are a few points. I mean, again, there are so many other things from personalizations and private labeling to, again, like I said, product flexibility that's going to be up front and center in 2026. But at Blue Sage, we are continuing to implement a number of these technologies and products to further add value to our product set. And again, further enable engagement across the entire loan lifecycle from the borrower to the settlement agent to the underwriter in order to make everybody's engagement better and close more loans faster.
Great insights, Joey. Now I want to talk about the servicing side of the business. For that, I want to introduce everyone to Jane Mason. She's the CEO and founder of Clarifire and the visionary behind Clarifire and an innovative process automation solution that connects all servicing processes, roles, and partners in one smart, configurable, secure application. With many years of experience as an entrepreneur and innovator, Jane is a recognized leader in technology solutions that enable organizations to achieve digital transformations, enhance productivity, and improve customer experience. She has received numerous industry and local business awards and accolades. So from a servicing standpoint, Jane, what would you consider must-have technology?
I think the question for all of us is what should we do next year and what technology should we buy or should we buy anything or, how do we get better as always? So as you know, I'm Jane Mason, CEO of Clarifire, and we do process automation. What does that mean? That's workflow. And the key, we believe, is still workflow that connects all of the different disparate departments and entities within your organization. So I think that we should be looking at workflow that you can use process building to actually make a difference with your middle operations for servicing in particular. And I think you need to use AI. We use AI every day at our company. We use it for all different types of things, whether it's just what's up with the regulations, how can we compare it to all regs, what's up with the latest workflows and milestones that we need to implement, and also code development. What can we do? How can we do it faster? And how can we generate documents faster, making all of us and everything that we do better? So I would say it's a combination of workflow. And the other reason that I'm really promoting the workflow is because it is seamless. It connects all the dots and it gives you the opportunity to cut your costs from a middle operations servicing perspective, as an example. So if you have a nitty-gritty problem like assumptions that people are still doing it on spreadsheets, and your originations application and your other applications really don't solve for that, you can just plug workflow right into that and create your own process, or come to us for a process, and we will tell you the best way to do it. You can manage your risks, you can eliminate your errors, and then you're solving for the gaps. Other areas for middle operations that are very costly, that aren't that don't really have point solutions, are escrow, and the other thing is the investor reporting. So I think these little nitty gritty, like I said, areas are very important, and they will reduce our overall risk if we can think about streamlining from origination all the way through servicing and client retention and client services. I think that we'll all be much better, and we're going to be reducing our costs and reducing our cycle times. And that's the most important thing, is the cycle time reduction. So for example, one of our recent proof of concepts that we've done with a customer is we've reduced the assumption process considerably. And I would say since the time that we started working on this, we're looking at a 7 to 10 day reduction in the overall process and the delivery of an assumption. So I think that's just an example of middle operations, things that cost us all money, things that we're kind of ignoring when we think about the ROI of servicing. And the other aspect of it is we all have invested a lot in point solutions. And you can also think about the concept of having a process automation application that has point solutions that were developed specifically for the industry to mitigate the needs and the challenges of the industry and of our economic climate, as an example. So I would think that we could learn from that and learn that workflow has been pervasive, has orchestrated the way that we all work, and it fills all the gaps of exactly where we need it and exactly how we can reduce the costs. From an AI perspective, we can use that for many different things. And I think it's a perfect complement, but it's an assistant to what we're doing. You still have to have workflow. You still have to have a business rules engine that is tried and true. And you still have to be able to manage what you think are the milestones for your servicing organization. So I believe that from a technology perspective, we're going to be able to move forward rapidly if we adopt more automation more rapidly, and we will see the benefits because the efficiency curve is going to continue to rapidly grow. You plug in the AI knowledge that we can all rely on to a certain extent, and then we can go from there. From a partner perspective, we're all getting better with the APIs. So the more APIs we get, the more easier it is to connect. So the better our ecosystem is. So, and the better we're getting. So I think that we just need to pay attention to all of those little gaps that we know are costing us money and that are creating risk. But we also need to think about the future, which is always going to be the orchestration of work and in between all departments and all systems within your organization. So those are my thoughts for now. And thank you very much, Tony, and everyone for inviting me today.
Lastly, I want to get a lender's perspective. And for that, I want to introduce Lisa Schreiber. She serves as Senior Vice President of Corresponding Lending at eRESI. where she is driving the continued build out of the firm's whole loan purchasing platform. Her leadership spans sales, training, client services, and the development of client-facing technologies. Widely regarded as a builder of businesses, Lisa has spent her career architecting and scaling mortgage platforms. So from a lender perspective, Lisa, what do you consider must-have technology?
So what is in store for 2026? What do we think is going on? Well, it's the same story for sure as far as cost and efficiency. Seeking cost and efficiency. It's something that we've been talking about in the mortgage industry forever. Although I think now with the use of AI and certainly the conversations around AI, which are everywhere, we're going to see quite a difference, and I think it's going to make a very big difference for us in our industry because it's taking over our daily lives. You know, it's very different than in years past, where the mortgage industry has not been great about adopting technologies in the past. You know, we're a little slow to do that sometimes. Of course, you always have your overachievers, your UWMs, Rockets, and then so many other IMBs and others that, you know, we just don't hear about as much. But for me, as far as what I'm looking for in 2026, it's going to be a lot of point of sale, underwriting, credit risk, credit quality, pieces that I'm looking for. So my specialty right now at eRESI is non-QM lending, non-agency lending. And it's a typically in the non-agency space, there's not a lot of technology that can be utilized as effectively as like a DU and an agency product, right? We talk about that quite often. So AI, I think, will be a big factor for us. There already is some great technology around bank statement and cash flow analysis, which helps us a great deal, especially in the products that we serve our self-employed borrowers and investors. Additionally, I think there's going to be some breakthroughs on the AUS side, at least some guidance for non-QM and non-agency products. So maybe it's not a full underwrite, here you go, prove, there you go. But basically, I do think that we're going to find a lot of value in some AUS style products that can lead and educate people on the product that they really would find best for their borrowers. So that'll be a cool thing. We definitely have some upside there. But, you know, that particular product does have like a little nuance as far as, you know, common sense. How we get that into AI will be very interesting. Other pieces that I think everybody will be using by like year end of 2026 are chatbots. I know we've got one coming, which we're really excited about. But chatbots and, you know, just, you know, quick ways to find information and how to guide people to the right things that they need. And then, of course, taking those to point of sale will be extremely helpful to meet the borrower needs. Other things that I think will be helpful as well is how we communicate. You know, how can we take, for example, we have tons of email boxes for different things that we do. And we always thought that was a good idea, you know, distros and things like that. You know, how can we make that way more efficient? Like, seems that AI would have a great role there. So for us, I would say AI, how can we use it most effectively? How can we really take our communication and how we look at our products and our borrower offerings in a much easier and quicker and a faster way to get people in the right seat?
I can't agree more, Lisa. Great comments. And what a wonderful panel. That concludes day 2 of the 15th annual Engage event. Don't forget, we are accepting applications today on our website for the Thought Leader Award. I hope that you'll apply, and I hope that you'll join us tomorrow for day 3 of the 15th annual Engage event. Until then, so long, everybody.